right, welcome to the Closing Beat, everybody. Happy Thursday. Hope you're having a good day here so far. Just a little heads up, we have our Wine and Wealth class tonight for our customers. Going to be a good one, our portfolio overview. We keep it really short. We like to update our customers once a month on our portfolio changes as well as the overall stock market. And so we spend the first few minutes just briefly going over everything and then really in depth with everything else as far as the markets and economies go. I hope you'll check that out. If you're one of our customers, the email is in your inbox. We're a financial advisory firm here, SEC registered fiduciary financial advisors. And so this is just a quick show that we do to cover the stock markets. And if it's something that interests you and maybe you think, hey, my advisor doesn't help me out, maybe you'll check us out. Also, I feel like we have some family watching today down in South Florida, so just want to say hello to everybody down there. I also put a video link in the description of this broadcast here to share the last time Team Jazz was down there and had a little friendly competition, just something fun that we filmed. So if you want to check that out, that's cool. If you're watching down there in South Florida, hope all is well, and check out the video. Let's go back down memory lane. Also, no closing beat tomorrow. We're going to take the day off. We put a lot into our monthly updates. Going to give everybody a break tomorrow to kind of chill out a little bit since we've got a lot to cover tonight in that class. So let's talk about the markets today. Off to the right-hand side of your screen, you see a little bit of mix up there. You got the Dow higher by over 0.5%. The S&P added 6 points. By the way, exactly what happened yesterday, right? The S&P gained 0.21%. 2 days in a row. That's kind of rare, but not rare enough where I'll go back and see what happens afterwards or do any studies on that. And the Nasdaq lost 3. Right there at the end of the day, it just sold off. Now, we had the same thing happening today as we did yesterday. We started strong. You can see in that chart in the bottom right-hand corner of your screen, we started off strong, a little bit of weakness throughout the day, and buyers came in to buy that dip. So you have this really steady sort of gradual, they call it a melt up in the overall stock markets. I'll just pull up the charts. We'll take a look. You got a melt up here in the stock market. So the last few days since that Monday blast off have just been sort of nice and to the upside. It's a really good thing. You might look at this market and say, this is boring. Come on, what's going on? But in reality, it's a good thing that we haven't sold off very much. And so very, very good there. This is the S&P 500. If we look at the Dow, you got a bigger gain for the Dow on the day, hitting new highs there. And that is new highs for the year. And that is largely due to Boeing and Disney. We'll cover that in just a second. Tomorrow, the S&P, Dow, Nasdaq, something you're going to want to pay attention to, at least in the morning. We got a big jobs number coming out first thing in the morning. We'll cover that tonight in the class. But remember, last jobs number came in at 20,000. Was horrible. And there was some arguments, yeah, okay, the weather, seasonality, things like that, government shutdown. But this jobs number better be a much better, or you're going to see a reason for the markets to get really shaky in the short term. We're expecting 175,000 jobs and a 3.8% unemployment rate if you're following along. And the report gets released before the markets open, so all that action first thing in the morning could be quite interesting there. On the S&P 500, you now have 2% until we hit all-time highs. Let me zoom out just a little bit. Your all-time highs are back over here. You got 2% to go until we get there. Think about that. How crazy is that? We just came out of last year's disaster. Mainly December was the more exciting part of it. And you had all these people bailing out of the market saying the world's going to end. I want you to remember that. Remember this very clearly the next time the markets fall. Has the world ever ended? I mean, maybe we've come close, right? There's been some exciting times, but the world doesn't end. So market dips for the long-term investor, of course, are opportunities. In the short term, you got trade talks, things going well there. However, it seems that the negotiations have moved more now to, hey, if we come up with a deal, how are we each going to know that we're honoring the deal? So they're calling it the enforcement, right? How are we going to know that we're each enforcing our sides of the discussions there? I don't know. I'll say what I said yesterday. Don't you kind of feel like this is priced in? I asked you to leave me a comment below. Got a couple comments where people said, no, I don't think this is priced in. The markets are going to shoot sky high. That's a very bullish position to take, but it sort of feels like some of this is priced in. If you look at the Chinese markets, and I'll move on to that right now, the ASHR, this is one of the Chinese ways to look at the Chinese market. This is sort of the equivalent to our S&P 500. So if you're like, well, what's the S&P 500 in China? ASHR is close enough, and that broke to new 52-week highs today. If you say, well, look, I like a little exposure to China, but I don't want to be all in, maybe the EEM is something you want to look at. That also had a good day today. I think it was about 30, where are my notes here? You have about, this is an exchange traded fund that has about 33% exposure to China. So you're not all in on China. You've got some other emerging markets in there as well. There's about 1,000 names, 968 or 78 or something like that names in this ETF. So another way you can participate in China. Remember, China currently in a bull market with tons of room to run before it even hits its average bull market. If you're one of our customers, you want to know the actual data on that, well, I'll be sharing that with you tonight. Have I teased that enough tonight? You guys pissed? Is that like enough? Come on, Dustin, quit talking about it, man. Let's move on. Regional banks. So Fed day sell-off. I've been talking about this here now for a couple weeks to help you out with this. The Fed day sell-off is all this action right here. 12% decline in about 4.5 days. Nasty decline there. The rally is now about 9%. So we've now recovered about 9% of that Fed day sell-off. Lots of overhead resistance, 50-day moving average. We're trying to break through this little downtrend here. But the regional banks today said, we got this, right? We totally got this. If you want to look at the larger financials, let me go over here to the, well, let's see. Can we see this one? Let's just go to the top. If you look at the larger financials, that's the XLF. By the way, big changes coming to this list. One of the better parts of having a developer, which that was the person sitting back there the other day. That was our developer, Charlie. What's up, Charlie? How you doing? He's back home right now. But anyways, XLF, right, or big changes to this thing. That's what I was talking about. We want to be able to add more symbols and sort through them, show you the performance in them. So the beauty part about having your own developer, you say, hey, let's work this thing out. Let's figure it out. He's working on that as we speak, actually. So we'll get that launched hopefully by the weekend. We'll see. No pressure, Charlie. But anyways, large financials also have a lot of overhead resistance as well. They're basically stuck in a very, very sloppy technical range. I could even be sort of tarred and feathered for calling this a range, but we're going to call it a range for now because there's no progress, right? Up and back and forth between the 200-day moving average. And we know that in order to get the S&P to move to all-time highs, we need the support of the banks, the large banks in particular, and we're sort of getting that, right? The last couple days have been really good for this, showing that it's at least trying to move out of this, we're calling it a sloppy range. Industrials, if you take a look at that, well, Boeing was a big help today. Boeing was in the news and also had a really, really good day. We'll cover that in a second. But broad-based, look at the holdings inside of the industrials. You've got 3M, one of the bigger holdings in that ETF and in that category. Obviously, a very strong day, little breakout there on the charts if that's something you're interested in. And then United Technologies, another name in the space, more the defense side of things. Good day, added another 1%, holding that recent breakout. So if you're to look at this here, you got sideways consolidation, no real interest in the stock. And as of Monday, you have interest, no real selling there. So good strength there in the industrials. I pointed out regional banks, pointed out large financials, industrials, China in a couple different ways, emerging markets. If you want to look at home builders, that sort of melt up continues. A little bit more interesting today. Got a 1.4% gain on the day, but that's showing more excitement, more volume. I didn't turn my phone off. More excitement to the upside. And so looking good there on the home builders. All right, let's move on to individual stocks. In the news today, you're going to see Tesla. A couple different reasons for Tesla. The main media focus was the hearing that they had in New York, where it was the SEC versus Elon Musk and Tesla. Basically, that worked mostly in Tesla's favor. The judge said, hey, you guys need to work this out. I'm giving you 2 weeks to work it out. Get together. You got to spend at least 1 hour together hashing out what he can tweet and what he can't tweet, because the rule... Look, I tweet every now and then, and the SEC regulates us here at Jazz Wealth. I don't go as far as he does, but look, there's a rule for that and what you can and can't say. The problem is that rule is sort of vague, and if you have a lot of money to challenge the rule like Mr. Musk does, you can do that. I won't be the one to do that, so you see sometimes I hold back on that. Anyways, stock was down by 8.25%. Today, deliveries, much weaker than expected. The company says that's going to hurt our bottom line. You had a 31% drop in deliveries, and basically the company said, no big deal. We're still going to hit our full year targets. The problem is, in order to do that, they have to deliver more cars per quarter than they've ever delivered before. So what's the plan? So investors were like, I don't think that's possible, guys. You probably can't do it. They delivered 91,000 cars was their record. They have to be close to 100,000 in order to make that deal happen by the end of the year. I think investors got that one right today to say, I just don't think you can do it. So let's move on. You got Constellation Brands. Sort of weird. The name of this company doesn't really imply what they do. Stock was higher by 6.5% today. Couple things. These guys own the beer and wine, spirits kind of category there. They're selling off 30 of their lower end brands. I forget who they're selling it to, but they're selling those off. They also announced earnings. Earnings came in much better than expected. Not a lot of clarity on their recent sort of investment in Canopy Growth. CGC is the symbol there. Remember, they didn't partner with them. They invested $4 billion in them. I think investors were hoping for a little more. For the moment, they beat on earnings. All is going well for Constellation Brands. And you can kind of see that in the retail sales numbers. We're going to cover that tonight in the class, but retail sales numbers are pretty poor for a lot of the categories, like sporting goods, but pretty good in bars and restaurants, which is where these guys really shine, right? That's their offering. So looking good there. That's not a symbol. Let's look at Boeing. Boeing, almost a 3% gain today. Lots of different news on this one if you like to follow. Bottom line is, in that Ethiopian crash, the most recent crash that they had there, the preliminary reports show that, A, the pilots were following emergency procedures. They did everything like they were supposed to. At least that's what the preliminary report says. And that the fault was in the MCAS system, which isn't really the focus right now. So Boeing got a little bit of a break on that one. Back to the 50-day moving average, still stuck right at the 50-day, but a 3% gain on the day. And that's one of the reasons why you have a lot of support in the Dow. Remember, the Dow is a price-weighted index, right? So it gives credit to those that are more overpriced. Also helping the Dow today, Disney with a gain of about 2%. They got an upgrade. I believe it was Guggenheim today. They got an upgrade. Guggenheim went crazy, kind of upgrading everybody today, or changing their assumptions on a lot of companies. So great support there from Disney. Obviously good for them, and also helping the Dow. A couple other things here. Amazon. That's not a symbol for Amazon. There you go. AMZN, of course, the symbol for Amazon, holding near highs. News just came out. Jeff Bezos and his wife settled their divorce as far as who's going to get what company-wise. Not talking like furniture, like we didn't talk about that. We're talking about like control of Amazon, control of Washington Post, his other companies there. And basically, Jeff Bezos made out very well. Not saying his wife didn't. His wife is going to be like the 4th or 5th richest woman on the planet by simply divorcing him. I think she's worth like $36 billion. Whoa. So the stock was pretty much flat on the news there. And that's pretty much it. I think I pretty much covered it. If you have any questions, I'm happy to help if I can. You have Bitcoin remaining volatile today as well, with a loss of 6%. So big rocket ship up, pulled back a little bit today. So pretty interesting there. Cool. All right, questions. You don't think the trade war is completely priced in because lots of the details in that agreement will affect different sectors in different ways. I agree. I mean, it can't be completely priced in, but I think a lot of people are bullish from the sense that they are negotiating, they are talking, they will get something done. If it's an okay deal, right, I think the markets still sell off, in my personal opinion. If it's a great deal, of course, we blast off to new highs, but the problem is we're already sort of getting overbought, or maybe we'd be at that point by then. So if we're already overbought and there's a huge move higher on the news, I worry about that in the short term. We'll see, right? We'll see. What's your favorite commodities to trade and invest? How about a stock like ADM for exposure to commodities? That will get you exposure to commodities. That's an individual stock play. If you want to look at like ETFs, personally, I'd rather go that route just because that's a hard sector to keep track of, unless you just want to go straight to the futures market, play gold and oil and things like that. But to say invest in commodities is really broad-based, right? So that'd be like saying, what's your favorite Russell 2000 way to invest, right? Do we pick individual stocks? If so, there's a lot of them. Commodities obviously break down into numerous categories, natural gas, copper, etc. So you really want to focus on that first. Where in that space do you want to be? Do you like oil? Do you like gold? Whatever it is. And then you can go from there. Killer Vet says, if I do join Jazz Wealth, do you have to sell all your positions with Fidelity? If you have an individual account with them, it's a case-by-case basis. We certainly don't want to cause you any taxable gain or loss that you weren't expecting. If you have a Roth IRA, traditional IRA, things like that, we will usually close them for you to save you the commissions. We'll just transfer whatever we can over and then close them over here. If it's something we can't accept, we'll have to ask you to close it over there at Fidelity. We can also transfer part of your account. If you said, hey, I like these two positions I have, I'm not willing to sell them right now, you can either transfer them and we'll hang on to it until you're ready, or you can just simply hang on to it over there, transfer everything else, and we'll go from there. But it depends on the account type. So I would say Roth IRAs, traditional IRAs, we just close everything out for you to save you the cost. Yep. A Biomed. I'll be very honest with you. I don't like this sector. I never have. It's not something I focus on. I don't research it. When news comes up, I don't pay much attention to it. Very tough sector. I've just sort of agreed that I was going to stay away from it, right? There's so many other things I can choose from. In our last update for customers, we made a big deal out of how we moved a lot away from biotech because we don't need it. We'll only put it in the different funds if we need it. We just don't need it at this point. We're still accomplishing all of our goals and objectives for each fund without having to deal with that. So I can't really give you the best help on that one. I mean, I study this stuff left and right, not the biotechs. AMD, absolutely on fire. I'll give you that, Jay. You're saying, what do you do, NVIDIA versus AMD? Well, it's hard to argue to not look for AMD. However, NVIDIA, you got a lot of upgrades there. A lot of people saying that this price level, this is a discount. So if you're looking at some of the analysts and what they're talking about, it would seem favor leans towards NVIDIA, though that really hasn't panned out yet like it has in AMD. Thoughts on using systems like the Zacks ranking system? There's a lot of them out there. I don't know them to be any better or worse than all the other ones there. It would come down to cost for me. There's a lot of free ones out there you may want to choose, and if you're interested in doing the homework yourself, there's lots of great sites out there where you can sort of scan through the things that you like and assign ranking to them, probably for a lot less cost. But that's a great company. There's no doubt that those guys put in a ton of effort and do it well. Do you believe the bar is set low for this earnings season like the last one? No, I don't. I think the bar has already been lowered, right? It's up to companies now to either show that they, in fact, are slowing down, and that becomes the topic of this earnings season, or to show that this was all a hoax and everybody sort of overreacted. I think most companies are going to respond with the slowdown idea. I put in the bottom there today, they did a study of, I think, the top 400 CFOs out there, and they are mostly all planning for a slowdown. Not one of them thinks a recession is on the way, and so they're not planning for that. They're essentially just saying, hey, we blew it out of the water for the last 10 years. It'd be totally normal if we sort of tread water for a while, and they're trying to prepare people for thinking like that instead of a recession. Second quarter, usually weaker. Oh, did I miss the question? The answer to that, by the way, is the second quarter, it really depends on how the first quarter did. I'm going to cover that tonight in our class. We got all the data on what happens when the first quarter performs either with a 1 to 5% gain, whether it's flat, 5 to 10%, and so on, to kind of show you. I'll give you the hint that when the Q1 is really strong, Q2 is also very strong statistically. I believe it was 78% of the time, with nice growth, by the way. Maybe I'll tease you guys and share that part of the class with you. But the hint is the first part of the second quarter is typically rather rough. So we're going to break that down tonight as well, kind of thing we like to cover there. Cool. Well, hey, that's all I have for you. I appreciate you watching today. If I helped you in some way, maybe you'll hit the subscribe button. Really appreciate it. Also, not allowed to ask customers for reviews. So if you're one of our customers, I'm not asking you for this. But if you watch this and you think, hey, this guy's pretty good, he helps, he's doing things that other people don't, maybe you'll consider leaving a Google review for us. But if you're one of our customers, that is definitely not directed at you, because I'm not allowed to ask. If you do it and you think that we're good or there's room for improvement, that's up to you, but I'm not allowed to directly ask. So that's the end of my day. I got to get ready. We got Wine and Wealth tonight. Looking forward to it. I will see you guys there, and enjoy the rest of your day.